Today, I want to be sharing a new multi-time frame analysis. So we will be taking a pair, making a multi-time frame analysis on it, checking the order flow. So what big banks and institutions are doing on that specific currency so that we can gain an edge over our competitors in the market. And then I will be showing to all of you how we can be looking for a potential capitalizing opportunity on that specific pair. So I suggest you watch the video until the end. And if you're new to the channel, I'm a top author on the TRADINGVIEW platform and I share free education and analysis on all my platforms daily. So I suggest you watch the video until the end, and then if you like it, you subscribe. Okay, so a very interesting pair to follow for next week is EURUSD. And in today's video, I will be giving you the full analysis of it, and I will show you how you can be looking for a potential capitalizing opportunity on it, because that is exactly what we will be doing with students. And as usual, I will keep the analysis very, very educational so that I can show you exactly what you're supposed to be looking at in the market, and I will help you develop your own strategy. So let's start here by what we have from a weekly perspective on the pair. So from the weekly time frame, what we can see is that currently the market, after creating this overextended W formation, is retesting this very important supply area. In fact, the market, when the last time it had reached this zone, it started all this very strong move to the downside that led to the creation of a lower low, basically to go and test this very important descending trend line, which acted as strong support for EURUSD. In fact, the market then bounced back up. Now, the market is currently retesting a very strong resistance area. That is what we can get from the weekly time frame, and it is approaching it also with this overextended W formation. Therefore, we definitely expect the market to make a retracement to the downside from a weekly point of view. So from a weekly perspective, keep in mind resistance, and we want to see the market make a move to the downside, because we also have the W formation, and as you know, the completion zone of a W formation is at the neckline. Now, before we go down on the daily time frame to gather more confluence for this pair, I first want to show you what is going on from a COT perspective, so commitment of traders, what hedge funds and institutions are doing on EURUSD. Now, here what we can see is that we had a very big shift from having minus 114k net positions all the way up to 81k net positions. This is a big shift, meaning that we went from having more shorts than longs to having more longs than shorts from an institutional perspective on the EURUSD. Now, why am I saying EURUSD while here you read euro? Keep in mind that each and every currency in the market is traded on the spot actually against the USD. What does it mean? It means that if you're checking the data for the euro, what you're actually checking is EURUSD. So from an institutional perspective, we have seen a clear shift from having more shorts than longs to having more longs than shorts, with a 29.9% long exposure. So hedge funds have a 29.9% long exposure at the moment on EURUSD and a 16% short exposure. But keep in mind, they have started closing some longs. Even if currently we're sitting at 174k longs from the 147 that we had here, we can expect some profit taking. Why? Because look at what we have. If we go down on the daily time frame, that is the reason for which I wanted to show you this before going down on the daily time frame. We can see that currently we are definitely overextended to the upside. So it makes perfectly sense that we have seen a clear shift to the bullish side from a hedge fund's perspective on the EURUSD, because we have seen this beautiful push to the upside, very strong. But currently we are overextended. Therefore, we definitely want to see a reaction to the zone and the creation of a retracement, meaning to see big banks taking some profits. And there is the possibility to be riding this retracement and then again be riding the next wave to the upside. Now, more confirmation that we have from a daily perspective, because at the moment, yes, this is the weekly supply zone. But what other confirmations we have on the daily time frame? Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. On a daily time frame, we can see, removing this, that currently the market has already started to show a rejection of the weekly supply. However, what happens if we go down on the 4-hour time frame? Even if, yes, the market from a daily perspective closed red, we can see from the 4-hour time frame that there is no sign of weakness yet. Just because the market made this retracement doesn't mean that the market is ready to make the move to the downside, because clearly all the structure is still bullish. The market has been creating higher highs and higher lows for quite some time now. And as you know, that is the definition of an uptrend. So everything is still bullish at the moment. Now, I know that many people are currently already shorting EURUSD just because they see this red candle, which might lead in a perfect manipulation to the upside. Because if everybody now starts to short because they see that daily rejection, then most likely their stop loss will be above this high, which leads to liquidity that hedge funds can go and hunt just above this high, meaning that we can definitely see the market go and spike above this high, take all their stop losses out, and then start the real move to the downside. Why? Because if you have that much money to actually manage, there is not enough liquidity in the market for you to trade. The problem that big banks and institutions have is that when they are about to trade, they can't just click and their trade gets opened like for us. They have to generate the liquidity in order for them to trade, because for every buyer in the market, there has to be a seller. For every seller, a buyer. But they have so much money that sometimes, very often actually, there aren't, for example, if they want to buy, enough sellers. So what do? They generate the sellers by hunting stop losses. So this is definitely something that we might see. But anyway, guys, trading is reactive, is not predictive. And that is why you need a clear set of rules, both from a directional perspective and from an entry perspective. Now, what I suggest is to having clear rules for direction and taking your direction from the monthly, weekly, and daily time frame. And then you go down on the 4-hour time frame to find your entries, because in that way you will be able to find very high probability risk to reward opportunities. We, with students, only take a trade if we have a minimum 1 to 3 risk to reward, in order that even if we have a terrible performance, which sometimes it didn't happen, for example, this year we're doing great. We are currently more than 50R in profit for the month, which is crazy. But it sometimes might happen that you get a losing streak. But even if you have a terrible performance, for example, 30% win rate, which never happened, but it would be like very, very bad performance. If you always have a minimum 1 to 3 risk to reward, you are still making money, because 3 times 3 is 9, but minus 7 is 2. So if you win 3 trades out of 10, you still made 2R. If you're able to position yourself with a minimum 1 to 3 risk to reward, which is only possible if you drop down on lower time frames to perfect your entries. But again, you need clear rules for that. Now, how we will be approaching this situation with students on EURUSD? We will be monitoring price action from a 4-hour perspective inside of this area. First, we will be waiting on the 4-hour time frame to see a clear shift from a bullish market that we have right now to a bearish market. Will this happen here? Perfect. Then we will be looking for one of our valid entries. And if the market will provide to us one of our valid entries, then we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside, for the test of this previous resistance, which will be then turned support, so a very strong demand area at this zone. On the other side, if everything will remain bullish as it is right now, the market will just continue to the upside and we will not be looking for any possible long shorting opportunity, because everything is bullish. So that is why you always have to wait on the 4-hour time frame for proper confirmations, because if everything will remain as it is right now, we are not looking for any shorts. We will not be looking for any shorts, because on the 4 hours, everything is still bullish. And that is why you always have to wait for proper confirmations. But if the market will shift from a bullish market to a bearish market, then we will be waiting for one of our valid entries. And as soon as the market will provide it to us, we will be looking for a nice short with a very good risk to reward and very good probabilities for the move to the downside. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. You will first learn all the rules of my strategies and then trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every question that you have each and every day. So it's a very complete program. I suggest you go and check it out. The link is in the description, or I will see you in the next video.